Hey everyone, in this section I will do an introduction to exchange rates. If US firms, businesses and consumers want to buy and sell international or do international transactions, they will need to convert their currency to another currency. And exchange rate is the price at which we change one currency for another. We can look into the foreign exchange markets and look at how volatile the exchange rates are. Everything keeps changing by the second. The first one, EUR USD, is 1.13140. Now it's 26. This means $1 is equal to 1.1312. Now it's 32 euros. The second one is GBP USD is 1.26449. $1 is equal to 1.26450 Great Britain pound. Then we have USD MXN, which is 22.61. Now it's 33. This means $1 Mexican or 1 peso is equal to 22.6125. 1 USD is equal to 22.6116 Mexican pesos. So let me just write it down here because it keeps changing so much. I just got confused with writing the same numbers. So I just wrote down $1 is equal to 22 pesos. This is the price of a dollar. Now I can write 1 peso is equal to 1 over $22. So this is equal to 0. Just gonna be out with my calculator so that I do not give you the wrong answer. Is going to be $0.04545. So this is the price of pesos. This is how we can convert one currency to another, and I'm going to use the notation E for exchange rates for now. Then we can look at the extraordinary size of the foreign exchange markets. The major currencies are dollar, euro, Japanese yen, the British pound, Australian dollar, Canadian dollar, Swiss franc, and Chinese yuan. And looks like the daily volume of US dollars is 87.6%, and that's a lot. Now we are going to look at the people who demands foreign currency and the people who supplies foreign currency. So if you are a US citizen, you are going to sell US currency and buy foreign currency. If I'm looking at the market between dollar and euro, you have dollars, so you are going to sell dollars and you will buy euros. So you are always selling or supplying the domestic currency. This applies to everyone in the foreign exchange markets, and you are going to demand foreign currency. We have 4 participants in the foreign exchange markets. One of the firms that are involved in international trade of goods and services. Number 2, we have tourists visiting other countries and tourists visiting US. Number 3, we have international investors buying ownership or part ownership in a foreign firm. And number 4, we have international investors making financial investments that do not involve ownership. So basically we are talking about investors doing foreign direct investments and portfolio investments. Foreign direct investment is defined as purchasing a farm or starting a new enterprise in another country. Over here, there is some vested management interest. That means you are part owner of the company abroad or in a foreign country. Then we have foreign portfolio investment. Over here, you are investing in purely financial assets of another country, and this does not involve any management responsibility. And foreign portfolio investment, this takes advantage of exchange rate shifts. I will explain this foreign portfolio investment in the next section. Thank you very much.